for context, he was an entrepreneur, very successful, retired in his late 30s. Hardcore, hands-on man's man who in his free time decided to build a lake house. So he chose the site, designed it himself, built it himself, that kind of guy. I could never do anything like that. But we would spend our summers up there, and all the other grandkids would be out, playing in water and running around and shooting BB guns and all that kind of stuff. I would be hanging out with my granddad, and he would be watching CNBC and thinking about his portfolio because he'd been retired for a long time. He was really passionate about it. So we would sit around and talk about the kinds of businesses he was invested in, the tailwinds behind them, the fundamentals. We'd watch CNBC and he'd talk about, okay, here's what's happening, here's what that means, here's why that matters, here's what I think is stupid. And it was really fun and enriching, and just really sparked that with me at an early age. So for my 13th birthday, he bought me 10 shares of Shaw Industries, which probably wouldn't be recognized with a lot of Australians. It's the world's largest carpet manufacturer, which was later acquired by Berkshire Hathaway. And just from very early age, I was following stocks and markets, and just spiraled, and it's been my passion for a long time. Pre and post-COVID, we value companies with extremely loyal customers, unique and enduring IP or network effects. That's kind of at the economic model level. At the more, investment trait level, strong balance sheets. So that's one that a lot of managers talk a game about liking companies with strong balance sheets, but I think, March, April, you could probably get a good sense of looking at managers' results and find out just how much they did value having strong balance sheets. Companies with strong balance sheets can play offense when other people are playing defense. And 9 years out of 10, it's kind of people don't pay a lot of attention to balance sheets because so long as the P&L is going fine, what's the problem? But it's that, maybe 1 year out of 10 where having a strong balance sheet can be the difference of maybe not living or dying, but, thriving while your competitors are, firing a lot of people, bringing in costs. So that's something that we've always prioritized and continue to do so. Strong competitive advantage, but not just having a competitive advantage, but that the advantage is accelerating or improving at rates of change above what the market appreciates. Aligned leadership teams who have skin in the game, paying a reasonable price for all of that. So those are all things that we're always looking for. I'd say within the heat of COVID, particularly when we realized, late January, say, tourism sector, for example, was going to get hit. We lightened up on booking holdings, which we had at the time. It was already a weakly held position in terms of what we own, but we took some money off the table, and then weeks later exited the position when we'd looked, and it was very clear to us that things were going to get much worse than the government was alluding to or consensus estimates reflected. So with booking, the consensus at the time was their room nights would be down 4% year on year. And we looked at, 9/11, exogenous shocks in the US, and that was just a crazy thought to us, that it would only be down 4%. And, we thought that things could get much, much worse. We went ahead and exited, and literally that afternoon, they pulled guidance, and, so we were just ahead of the curve there. And during the heat of it, I think we were more conscious of those risks, but more opportunistically, we also realized, social distancing is going to change the game in terms of how a lot of these business models work. And we were very aware that, there are a lot of businesses that might look statistically cheap, but might be relying on, do they have large crowds coming through the business? Is that essential to the model? Because a vaccine could be a pretty long way off, and they may not have the balance sheet to survive, not having large crowds in their business. But more optimistically, does this suddenly drive demand because people are staying home and leaning more into those, I'd say, digital first companies, for example, who were net beneficiaries. So it's funny because that was a whole market cycle in the span of 3 months, but end to end, we still have the same core philosophy and what we're trying to achieve. In the middle, we were leaning more into it, and today I'd still say we're kind of leaning into a little more digital first, a little less consumer than usual. But we're always on the lookout for new opportunities and have to keep your eye out for what's happening. Whisper domestically is a good example. So Whisper They provide software and messaging tools that allow companies or governments or agencies to contact employees or consumers or customers quickly, efficiently, in an automated way. Where that's really come into play over the past few months is BCP planning. So they actually saw a big influx in government customers who suddenly were like, hey, we need to communicate with a lot of citizens or people taking tests and do it effectively. We need to be able to track it. It needs to be an auditable record of all this happening. So to them, it was a structural upshift in not just usage, but companies, dusting off their BCPs, right, and getting more serious about it. And I don't think that changes in a post-COVID environment. I think that's just going to be a new default, and that the level has been set higher. It's not so much that I think that the growth rate, if you could think of it was like this, basically it's reset to a new level, but we think it'll still keep going at kind of historically normalized rates. We're long-term investors, and when everybody says they're a long-term investor. I mean, quants don't, but the rest of us do. But investing against the grain, being greedy when others are fearful, and taking a long-term perspective, those are all things that are easy to say. But when the chips are down and you're experiencing the steepest market drawdown in history, I think you'll learn a lot about people's true execution of the philosophy. We did a lot of buying, and it worked well for us. But the way we viewed it was, look, we think a lot of these companies will actually come out stronger on the other side. And to be blunt, it's the steepest market drawdown in history. If you can't find something that's attractive, like, what have you been doing with all your time? And I think that really underscores the importance of watch listing, which is something we spend a lot of time on. We get to know our companies really well, but we also have a queue of ideas we continuously watch. Businesses that we think are really competitively advantaged and very attractive, but the price isn't right. America is going through a tough time right now. I've got friends, family, colleagues over there, and it is a very difficult period. In a way, America is kind of the worst positioned country for COVID because it is so decentralized and freedom and individuality is so celebrated. A lot of the time, that's great. A pandemic is kind of the worst case situation, exacerbated by having a reality TV star elected as president. The reality is there's no putting the cat back in the bag in the US with COVID. It is just so widespread. It's more a question of how they're going to navigate living with it, which is broadly true everywhere, but particularly in the States just because it's run so far. I'm rooting for, like everyone, I'm rooting for a vaccine coming sooner rather than later. I'm rooting for continued improvements on treatment, and there have been improvements there, which is good news. And, that ultimately it is more of a V shape instead of, whatever shape it might turn out to be with the economy. That said, the companies we own, we think are well positioned regardless of the environment. So with companies that are digital first, for example, if this were to drag on, we think that they'll be robust throughout that because you'll see more of a continued demand pull forward. They have good balance sheets. The longer this drags on, weaker competitors pull out. A lot of venture-backed companies are really struggling right now. So, your public companies that are well capitalized, it's entrenching them even further. So, we are absolutely rooting for, a big V shape and, a turnaround in the economy. But because the companies we own are just generally so robust, the longer it goes on, the stronger they come out on the other side. So we feel like there's a natural have your cake and eat it too with the strategy today.